Hey everyone, Happy New Year. It's Austin here. In this video, I'll be going over 7 companies with either plans or rumors to IPO in 2021 that I'll be looking at as potential investments, as well as some honorable mentions. These companies are in no particular order. My background in stock investing is I've been in the stock market for about 4 years now as of the recording this video. So I wanted to document my financial journey and share what I learned about investing and personal finance. With that said, these videos are not financial advice and are for entertainment purposes only. So please contact a qualified financial advisor or the appropriate professional for the subject you would like help with before making any investment decisions. So if you're excited to learn about some more companies, be sure to give this video a like. And with that said, let's get straight into the video. So the first company I have is Affirm Holdings. Affirm makes money by collecting fees from merchants when it helps make a sale and powers that associated payment. The company offers both 0% APR financing products and simple interest options, the latter of which makes money on the consumer end of the interest-bearing arrangements. The interest amounts are fixed, and Affirm says it doesn't charge customers more than the agreed upon amount, even if they miss a payment. As for the leadership, the CEO is Max Levchin, who was also the former corporate director at Yahoo, co-founder and former CTO of PayPal, and chairman of the board of directors at Yelp. So the CEO has a solid track record of building and running huge companies. Affirm also has a partnership with Shopify as of last July. Affirm was planning to postpone its offering from December until January at the earliest, so be sure to keep an eye out for this one. So my second company is Coinbase. Coinbase developed an app to make it easier to buy and sell Bitcoin via bank accounts. As of now, Coinbase has become a large operation. Here are some of the metrics on the business on the website. They have more than 35 million investors across 100 countries, over $25 billion in assets on the platform, and more than 1,000 employees. The Coinbase IPO will certainly be a big time validator for Bitcoin and other popular cryptocurrencies. So the IPO will definitely garner much attention. Institutional investors will also see this IPO as a way to get exposure to cryptocurrencies. For example, there may be some skepticism about buying these assets directly. Rather, the Coinbase stock may seem like a safer and easier approach to participate in the market. Speaking of crypto, Elon Musk has sparked speculation that Tesla could add Bitcoin to its balance sheet during a public exchange on Twitter. In addition, 2020 was a great year for Bitcoin since its price skyrocketed over 300%. With all of this fervor around Bitcoin, Coinbase's IPO is definitely one to keep an eye on. My third company is Robinhood. The Menlo Park, California-based company was founded in 2013 by Byjubat and Vladimir Tenev, aiming to democratize finance. Its platform allows users to make unlimited commission-free trades in stocks, ETFs, options, and cryptocurrencies. Robinhood has picked Goldman Sachs to lead preparations for an IPO, which could come this year, and value it at more than $20 billion. For context, Robinhood was valued at $11.7 billion in its last private fundraising round back in September. Robinhood has also raised just over $2 billion so far from private investors, according to PitchBook data. With all the hype around stocks recently, it's definitely one to keep an eye on as well. So my fourth company is UiPath. UiPath is a robotics process automation, or RPA, company that uses artificial intelligence to build software robots that let companies automate back office, repetitive, and time-consuming tasks. On their website, their purpose is to accelerate human movement. So their goal is to move humans away from this work and allow them to focus on things that bring more value to a company. Since the company was founded in 2005, UiPath has raised over $1 billion in funding from various investors, including Sands Capital and Wellington. The company claims to have annual revenue of about $360 million and more than 6,300 customers, including Amazon, Bank of America, and Verizon. It says 50% of Fortune 20 companies are clients. In 2020, UiPath raised $225 million at a $10.2 billion valuation, one that would rank it among the most valuable New York City tech companies at the time of its Wall Street debut. The CEO, Daniel Dines, worked at Microsoft for 4 years as a software development engineer before starting Deskover in 2005, before changing the name to UiPath. The next company I have is Roblox. So Roblox, the company, owns and operates Roblox, the video game platform. So anybody can build games within the Roblox system, where the games themselves are free to play, but many designers are charging fees for in-game items, features, and other assets. These fees are paid in the form of Robux, an in-game currency that can be converted back into real-world dollars. The company generates its revenue from the direct sale of Robux to users. Successful developers can earn serious money by cashing in their virtual boatloads of incoming Robux. The company collected $589 million of fully recognized revenue in the first 9 months of 2020, a 68% increase from the same period in 2019. At the same time, order bookings that account for the current flow of Robux purchases jumped 171% to $1.24 billion. In other words, Roblox can count on massive revenue growth over the next couple of years as this year's Robux orders work their way through the revenue recognition period. One interesting stat I saw was that Roblox was the second most watched game of 2020 with 75 billion views according to YouTube. With so much awareness of this game and how gaming in general continues to increase its growth, Roblox is a great gaming company to take note of. So my next company is Stripe. Stripe is a software company that facilitates transactions online so that business owners can accept payments, send payouts, and manage their businesses online. Stripe, with its last private valuation starting at $36 billion, is reportedly chasing a new valuation of up to $100 billion. Co-founded by two brothers, Patrick and John Collison, Stripe could see its valuation quadruple in just 2 years. According to IBM's US Retail Index, the illness caused e-commerce sales to skyrocket, seeing Stripe benefit from the industry's anticipated 20% growth in 2020, but there's still major room for growth too. Forbes quoted about 2 years ago that less than 10% of global e-commerce happens online, which is why Stripe has since bought Nigerian company Paystack for $200 million, and it also led a $12 million round for Manila-based Paymongo. And as its public competitors, Square and PayPal among them, are seeing their stocks as much as double and triple in 2020, it's unsurprising that Stripe's value is in turn driven up too. 2020 has also continued the trend of Stripe not only serving startups, but also working with enterprise industry names. Just to name a few, Zoom, Just Eat, NBC, and Mattel all made the list of new clients and joined the likes of big corporations like Amazon, Salesforce, Lyft, and Instacart. So it's clear that Stripe has a lot of growth ahead of itself. So before we get to the last company, some honorable mentions are Instacart, ThredUp, Poshmark, and Glossier. As of the recording this video, these companies have either also filed for an IPO like Poshmark or have rumors about filing for an IPO. However, with the IPO boom from other tech companies such as Snowflake and Airbnb, I wouldn't be surprised that these companies also IPO sometime in 2021. So the last company I have is Squarespace. Squarespace was valued at $1.7 billion in December 2017 when General Atlantic invested $200 million, adding to a $40 million stake taken in 2014. Led by founder and CEO Anthony Casalena, Squarespace competes against publicly traded rivals Wix and GoDaddy, among others. Casalena started Squarespace from his university dorm room in 2004 and was the sole employee at the startup until 2006, where it reached $1 million in revenue. It grew its revenue to about $500 million in 2019 and has employees around the world. Compared to Wix's revenue of $1 billion in 2019, it looks like Squarespace still has growth ahead of itself to compete with Wix. So I hope you got a lot of value and learned some of the top IPOs to watch for in 2021. If you found this video helpful, be sure to hit the like button, subscribe for more investing and personal finance content, and hit the bell to get notified when my videos get uploaded. Also, comment down below what IPOs or stocks you're looking to invest in 2021. And follow me on my socials to get even more investing and personal finance content. With that said, thanks for watching, and I'll see you in the next video.